for one simple little fact. And it was a great point that it was brought up because of this reason. We were able to perhaps correct something in people's understanding about what micro and macro means. When we look at the hourlies, and Silver's looking at it from the point of view of, right, what is the value? And rightly so, looking at the value and saying there's a lot of sell-side value in this oil. There is a lot of sell-side value in oil. So when we look at this sell-side value in oil, we can see what Silver's seeing. But when you're seeing it on an hourly chart, you've got to use hourly levels. Why? Because the hourly levels are what the reference point is for this hourly chart. You can use the hourly levels on a lower chart, but you can't use the lower time frame levels on a higher chart. So when we look at this idea here, we say, well, where would be the best opportunity to sell this sell side value? The best opportunity would be a break above $83. That's going to be where the trade's at. So the challenge that obviously the challenge that Silver had was in this case a whole dose of patience. There's a whole dose of patience on the oil price, because oil at the stage of the London Open was trading at $82.50. You knew that the top edge was $83 away. So from this reference, you get the big commercial sell levels at the big top edge. So obviously, if you try and sell that on a 5-minute chart because of short-term levels, then of course they are only short-term levels and they should only be traded against short-term values, because a short-term levels reference is the short-term value that it's referencing. On a macro scale, the only trade opportunity for us really on this sell trade is to try and get that 83 wholesale or above. So what happened to the oil price? We did get the 83 wholesale and above. We did get the top line. We did get the opportunity to then whack in some big orders into that high price. And obviously the takeaway from that was glorious. The sell at the top edge at 83.30s, dropping down to 81.77. A trade that we actually had ourselves into the top edges. A trade that we actually called this morning with the guys in the room. We actually talked about the squeeze trade just before that took place and the sell that came in afterwards. So we actually had a chat about this exact trade this morning, in line with the macro sell that Silver was rightly spotting and was rightly trying to trade into, but at the wrong price. So when we start drilling down into the 5-minute charts, we now know where the macro level is. It starts to make sense that we start looking for this trade on the 5-minute chart. We'll take a look at what the trade is. Take a look at how we spot the trade in the macro level on a lower time frame. A big increase in volume into that macro price level, which is exactly what you would want to see. It's exactly what you'd want to see. So there's the starting point for the sell. The first sell comes away from that big volume candle, and then the second sell is exactly where you would expect to see it, just above the top edge. And obviously just above the top edge, what happens next is, of course, we get this beautiful rotational bit of business. And on a 5-minute chart, based on a 5-minute reference point, we can see that there was a capper coming in off that big volume candle right there. And obviously, based on the capper narrative, you can see that oil prices coming from high to low comes into that perfect target price and into that target price area there. And that gives us a great idea when that huge volume pours into that down candle, that that's going to be the bottom edge. It's amazing how the class that we did yesterday about volumes and values and price just seems to start standing out like it's so obvious it's ridiculous. Well, it does. It does. It stands out so obvious that it's ridiculous into those areas. Now, obviously, as we go into that trade and possibly this trade, we have to look into those. And if you want to take them down to an even lower time frame, you can take them down into an even lower time frame. Try and find the entry price, try and find the actual example of where to get the business done in those areas, and obviously try and take advantage of the potential bounce. This one doesn't retest. We have a little retest here and then the price rallies. This retest was at higher price. We actually called that one at the time, as I said, live in the room. We talked about that max Momo squeeze, remember? And we said it's going to squeeze through to probably the 30, 35 level. It's exactly what happened a few minutes later. And then the selling, the big commercial sale came in right after that, and that was the sell-off that just went for $1,400 per contract, which is beautiful. What a great bit of business. What a great bit of business. Our exit on bonds was perfect. 190.20 to 24 was a perfect exit, guys. 20 to 24, so that was good. I am flat bonds, not interested. I don't think in doing anything on bonds this afternoon. Unless we get a run back up to 191. I think that might offer us an opportunity, but I don't see any other opportunities anywhere anytime soon. I think we've probably got a good hour or two away from the bond market. And we'll obviously catch up on this after lunch.